Starting with the earnings as well, then we have SIS that have reported their numbers as well. Overall, it looks like an inline set of numbers that came in from the company. But exciting is that the revenue growth, now that's back to the double-digit mark. The margins have come in stable as well. To talk to us about the outlook of the company, we have Dhiraj Singh, CEO of SIS, joining us right now. Mr. Singh, good afternoon. Thank you so much for joining us on the show. Let's start by talking about that revenue growth number, right? You all have spoken in the past as well that you all do want to achieve that double-digit growth. FY26 has started on that good note. Do you see this continuing through the rest of the years? Because last couple of years was high single-digit is what you all managed.
Correct. And our aspiration is not just to be in double-digit, but to be in the mid-teens. So we have given the guidance of around 14-15%. And we are near that. We are up almost 14% year-on-year basis. We see the trend continuing for the next few quarters. Our run rate for June, for the first time, it has crossed more than 1,200 crores. And Security India is more than 500 crores run rate. Security International is more than 500 crores. Facility Management is more than 200 crores. These are all-time highs. And on just this run rate basis, we are confident that we should end the year at about 15,000 crore and in line with our aspirations.
Okay, all right. What about margins? If you could just give us a little more details in terms of margins, because we understand that in FY25 you did manage to weed out a lot of the low margin contracts which had impacted your business. So now what are we expecting in terms of margins? Because if I do look at your trajectory, it's actually a multi-quarter low in terms of margins.
If you look at the EBITDA growth from on a year-on-year basis, because our business does have seasonality impact. The first quarter, there are a lot of churn in the contracts. There's a lot of SEN impact with the annual increments, etc. So on a year-on-year basis, we've grown about 10% on the EBITDA in absolute rupee terms. India, in terms of margin percentage, security has held ground, and it's now around that 5.4-5.5%. We are very happy that our facility management business, which we had been saying is on the upward trend on the margin percentage. It's now almost 4.8%, which was about 4% a year ago. So both the India businesses are doing well on the margin percentage, and we see this improving definitely on the facility management side for the next few quarters. International has definitely come under pressure this quarter on the margin percentage, but if you look on the normalized basis compared to last year, it is a slight improvement. What has hit the international business margin are the grants that had come in the last quarter in the Singapore business, the government grants. Those have not come. We had won a lot of the contracts in the defense sector in the last quarter, which have started in this quarter, and there are a lot of setup costs which have depressed the margin. And lastly, in one of our businesses in Australia, SXP, we have restructured the entire management team, which involved a one-time cost in this quarter.
Okay, so these were the impacts that came in on the international business in Q1, but from Q2 onwards, could we expect it to come back to those normal levels, especially in terms of margins also around that 4% mark and growth also that we are watching out for from the international business? Also, talk to us about the Australia side of the business as well.
The growth in the revenue side for international business is very robust. As we mentioned, last year was the highest ever new sales that we had booked of more than 100 million Aussie dollars. A lot of that will now get translated in this year in terms of actual revenue. And so the revenue for the next few quarters will remain very strong. We are working very actively on the margin side to bring it back towards the 4% plus.
Okay. Tell us a little more about the facility management business. How many contracts did you manage winning this quarter? How much are they worth? And from which sectors?
So facility management, we got more than 25 crores of new contracts per month billing and in the quarter. And they have been across all sectors. We have seen very strong growth in the manufacturing, in the healthcare side, in the logistics side. So facility management continues to be working across all sectors quite actively.
Okay. And just a quick word in terms of your current status for the DRHP that was filed by the company for SIS and Prosegur. This was filed somewhere around in March. So any update there, listing plans, what is it? Anything that you could highlight?
Yeah, so the good news is that just 2-3 days ago, we got the approval for go ahead from the BSE, NSE and the SEBI. So now we are, our clock is ticking for the 12 months window, during which time we'll have to list.
Okay. Thank you so much, for joining us on the show, giving us insights, and obviously we'll be waiting out for that listing that will be coming in as well. But on that note, we're going to slip into a very short break, and here's some good news for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store, Google Play Store, or you can just scan the QR code on your screens.